Listen to me. If you are retired or you are staring retirement right in the face, you need to wake up and pay attention to how the world of money is changing around you. The days of just walking into your local neighborhood bank branch, shaking hands with a manager, and getting a straightforward loan or a decent return on your savings are gone. Today, we are looking at an app called Lenme. You might have seen it, your kids might have mentioned it, or maybe you stumbled across it online and asked yourself, what on earth is this, and is it safe for someone in my stage of life? I want you to take a deep breath, sit down, and let's talk about the absolute truth regarding Lenme's features, because if you do not understand how these digital platforms work, you are going to make a mistake that costs you your hard-earned security. And at this point in your life, protection is the name of the game. You cannot afford to play games with your nest egg. Let's break down exactly what Lenme is. It is a peer-to-peer lending app. That means it is a digital marketplace that connects people who need to borrow money directly with people who want to lend money. There is no traditional bank sitting in the middle taking a massive cut. On one side, you have borrowers looking for anything from $50 up to $5,000 for quick expenses. On the other side, you have investors who put up their own cash to fund those loans, hoping to earn a higher interest rate than a regular savings account or a certificate of deposit would ever pay them. Now, if you are a retiree, you might be looking at this from two completely different angles, and both of them carry a unique set of fears and questions. Let's start with the first angle. What if you are the one who needs to borrow? I know the fear that keeps you up at night. You are living on a fixed income. Maybe you rely on Social Security and a small pension. Suddenly, the air conditioner breaks down, or you have an unexpected medical bill that your insurance won't fully cover. You need $2,000, and you need it right now. You go to a traditional bank, but because you don't have a hefty active salary anymore, they look at you like you're a risk. Or maybe your credit score took a hit somewhere along the line. The fear of being rejected by a bank or, worse, being forced into the arms of a predatory payday lender with a 400% interest rate is terrifying. Lenme says their feature fixes this. You download the app, you pay a small monthly subscription fee, which is usually around $2, and you post a loan request. You say, I need $1,000 and I want to pay it back over 6 months. Then, thousands of individual investors on the platform look at your request and compete for your business. They send you offers with different interest rates, and you have the power to choose the one that fits your budget. Lenme even has a feature called Balance Guard, where you can set a limit on your checking account, and if your balance drops too low, the app automatically triggers a small cash advance to protect you from those outrageous overdraft fees that banks love to hit you with. You hear passive income and high returns, and your eyes light up. You think, wow, I can make 10% or 12% on my money instead of 1% at my local bank. Stop right there. I need you to stand up and face the reality of risk. Peer-to-peer lending is not a guaranteed government-insured investment. When you put your money into a high-yield savings account or a certificate of deposit at a traditional bank, that money is backed by the Federal Deposit Insurance Corporation up to $250,000. If the bank goes under, you get your money back. If you lend $500 to a stranger on Lenme through an app, and that person loses their job or encounters a personal crisis and completely stops paying you back, that money is gone. Lenme does not step in and repay you out of their own pocket. You bear the entire loss. Even with their LenAI screening tools or their internal Lenme score that grades a borrower's risk, human behavior is unpredictable. And let's talk about those crypto-backed loans. Cryptocurrency is one of the most volatile assets on the planet. If the value of that borrower's crypto drops like a stone overnight, the collateral evaporates before it can even be liquidated cleanly to cover your loan. Is that the kind of volatility you want to be messing with when you are 65, 70, or 75 years old? Absolutely not. So, what is the actionable takeaway here for your life? If you are a borrower who needs fast cash for an emergency, Lenme can be a tool, but it should be your absolute last resort before a payday lender. Before you touch an app, I want you to pick up the phone. Call your local credit union. Credit unions are nonprofit organizations that are historically far more lenient and empathetic to retirees and community members than big commercial banks or digital apps. See if they can offer you a small dollar personal loan or an emergency line of credit. If that fails and you must use Lenme, you do so with extreme discipline. You borrow the absolute bare minimum, you choose the shortest possible repayment term to avoid racking up monthly subscription fees, and you pay it off early if you can. If you're an investor looking for passive income to fund your retirement years, my advice to you is to stay far away from peer-to-peer lending apps like Lenme. You do not have the time to recover from a string of defaulted loans. Your priority at this stage of life must be capital preservation and secure, predictable income. If you want better returns than a standard checking account, look into short-term treasury bills, high-yield savings accounts at established online banks, or investment-grade bonds. They might not sound as exciting as an AI-powered peer-to-peer app, but they will let you sleep peacefully at night knowing your retirement money is safe and sound. Remember, true financial freedom isn't about chasing the flashiest new app feature. It's about protecting what you have so you never have to worry about tomorrow. Stay safe, stay smart, and protect your hard-earned money.